And you voted against the rate cut. It was a 5-4 decision. Take us into your thinking at that time in the August meeting, and then we'll get to the present day.
Yeah, sure. So in August, as you point out, it was a very close vote. It was 5-4 in favor of a 25 basis point cut to start a rate cutting cycle. And I voted against it for a couple of reasons. I'm, like all of us actually on the MPC, I'm looking at indicators of inflation persistence, so indicators of domestic inflationary pressures. And so one of the things I've been looking at is wage growth, private sector wage growth in particular, and it's been coming down, certainly, but it's still much higher than would be consistent with us having a 2% inflation sustainably. We've got a bunch of different wage growth models, and wage growth has come in much higher than our entire swathe of models for a while, and will continue to probably
And that's still the
until
case
sometime
from your
next year.
perspective.
That's right. So wage growth is still above what our models suggest. So there's this unexplained component that could be explained by just a fundamental change in kind of wage setting processes. So that's something that held me back from voting for an interest rate cut. Also looking at inflation. Not all inflation is considered equal, and what we've been looking at on the MPC is as a sign of domestic inflationary pressures has been services inflation. Wage growth is the biggest component of that, of course, so it's unsurprising that as wage growth has remained elevated, services inflation has been sticky too.
And now it's come down a little bit, services
Yeah,
inflation?
so it's been moving in the right direction, definitely. But if you're trying to figure out core services inflation, there are a million ways to slice and dice it. And so one way is to kind of strip out all the energy-intensive services sectors to see how much work energy is actually doing and what's left.
I see.
And that metric's gotten kind of stuck. It's sort of flatlined. You can also strip out volatile components, index components, holidays, which means it's not really a reflection of domestic pressure, rents, and that's gotten pretty stuck at 4 to 5% as well, which is not consistent with us hitting our overall inflation target. So it's been sticky. Generally. Another factor is catering, which no one seems to pay
That's
attention
interesting. I
to,
didn't
but
realize that.
catering inflation has accounted for about half the fall in services inflation over the past year. And a lot of that is food prices, which aren't domestically generated.
I see.
So these kind of factors have caused me to vote for a hold in August, and also suggest that I actually think now that we're in a rate cutting cycle that we should remain on a cautious and gradual path.
Okay, so then take us into the September meeting where there was a hold, and that was
Yeah.
far more agreement across the MPC, 8-1, I think, the
That's
decision.
right, yeah.
How did that data that you're talking about now factor into the hold decision?
Yeah, so the wage price and services inflation data actually had come in largely in line with what we had been expecting, so in line with our forecast. And so I think there was general agreement that even though we are in a rate cutting cycle, we need to approach with caution. It might be worth pointing out here that there's a lot of uncertainty in forecasting generally. That's
IMF
clear.
can attest to that as well.
That's right. That's right. But also, there's uncertainty over kind of what state of the world we're in off the back of a pandemic and a war in Europe. And so on the MPC, we've come up with a few different sort of states of the world that could possibly be the case. And I'll explain three really
Please.
quickly. Yeah, so the first state of the world is that we had all these inflationary shocks, but they've come off. And as they've come off, inflation has been coming down and is set to hit its target in the medium term. And in that case, monetary policy doesn't need to be that restrictive to hit our target. That's the first sort of case of the world. The second one is that actually there is some inflation persistence, and it requires the Bank of England to bear down on inflation to actually hit our target in the medium term. And the third case is a more difficult one where there have been structural changes in kind of price and wage setting behaviors. And so that suggests that, U star's higher, R star's higher, Y star might be lower. And these factors require our monetary policy stance to be more restrictive for much longer in order to bring inflation to target. And so these are the three different states of the world, and I would argue that there's a greater than 0% probability on all of them.
If you had to wait, is it 33, 33, 33 across, or do you have your inclination of which state of the world we're headed to?
So, like many MPC members, I don't fit squarely in any of the buckets. I think it's most likely that we're in the second state of the world, where actually it requires monetary policy to bear down on inflation to get to target in the medium term.
And this explains some of your caution,
That's
on
right.
the interest rate path.
That's right. And I also think there's a risk that we're in this third state of the world where there are structural changes that does if you were looking for data to suggest that our star is higher, for example, you might see it in that, inflation's been sticky for a while, particularly services inflation, just by one way of example. So I think there is a risk that we're in this third state of the world, and that requires more restrictive policy for longer. And so I think each of us needs to work out our probabilities on each of these cases and come up with some kind of weighted probability on the right rate path going forward.
So then let me ask about the November meeting, because is there a risk of being too restrictive? Inflation has fallen below 2% for the first time in probably years, probably around the pandemic, I imagine last time it's hit that mark. We are seeing some come down in services inflation, as you said. So is there a risk that there's a weakening in the UK economy on some factors, and then monetary policy remains too restrictive? How do you think about the November meeting?
Yeah, so since our last meeting in September, we've had one set of data, and the inflation data, as you point out, headline inflation came out at 1.7%, which is below our 2% target. We anticipated headline inflation coming out below our target, actually. It's energy that's doing quite a lot of the heavy lifting there, and it's base effects that should come off going forward. So we actually expect headline inflation to tick up a bit into the end of the year, slightly above our target. There was also a downside surprise in services inflation, however. That was the biggest surprise, actually, in the latest print. And so for those of us worried about services inflation, as a trend, that would be great. The biggest driver of that, though, was sort of volatile accommodation, transport categories. So I wouldn't wait too much on that. So inflation's come actually out a little bit below our forecast. And I do think that there is a probability, a greater than 0% probability, we're in this first state of the world where actually, as the shocks recede, inflation should come down without the central bank having to bear down on it. So I do think that's a risk. I think that the risks to growth are possibly two-way as well. So it's certainly something that we're looking at. I mean, as you point out, the WEO just upgraded the UK's forecast. We haven't started our November forecast yet, so I can't possibly tell you what we'll come up with. But I will point out, relative to other developed economies, the speed limit for the UK in terms of how much we can grow without it being inflationary, so potential growth is pretty low. So, there isn't
explain that
room.
structurally, why in the UK?
Yeah, sure. So, I mean, potential growth is driven partly by productivity growth and partly by labor supply. That's right. That's right, and the productivity growth piece for the UK has really faltered over the past couple of years. Actually, it goes back to the global financial crisis, really, and also after Brexit, there has been a dearth of investment overall. Investment tends to boost productivity growth, so we haven't done our stock take on the supply side of the economy for a while. But when we last did it, it seemed like potential growth might be around 1%. So growth above 1% would, all else equal, tend to be inflationary. So our speed limit's pretty low in the UK.
Different situation than here in the US. But
That's right.
just one more on the November meeting, because what I'm hearing from you, similar to April, is caution. We came when we met in April, and then you delivered on that in your vote in August. Caution about the state of the interest rate path, and I'm hearing similar from you as we head into November. Is that fair?
I think that's fair. I mean, it's worth pointing out that all the indicators we have been looking at for signs of inflation persistence have been moving in the right direction. It's just a question of the speed with which they're moving there. So the news has actually been good. Things have been evolving broadly in line with our forecasts. That's all good news. It's also worth pointing out that I've laid out these three states of the world, and different MPC members certainly fall within different parts of those three states, but actually we don't have to agree on what state of the world we're in order to vote the same way in the short term on monetary policy. The disagreements would tend to be further out.
The trajectory has been good, as you say, on several of these measures are falling. Is there worry at all about rebound, energy price shocks, anything that you're tracking that could actually reverse some of the trends we've seen?
Yeah, so we certainly talk about risks on the MPC, and geopolitics is a big one. It's been surprising how tame oil prices and energy prices have been. Lately, I think it's possibly because there are concerns about global demand, particularly off the back of Chinese growth figures that we've seen. So if there's weaker demand, then that all else equal should keep oil prices lower. There are also questions around supply, with OPEC and Saudi suggesting they might increase supply. Also, the U.S. is now kind of the swing supplier, and that's a
Yes.
different state of the world
right.
than we were in the 1970s, 80s, for example. And so I think for those reasons, oil prices have remained pretty tame. That said, if the Middle East conflict expanded far beyond the Levant to oil-producing countries, then you could see an increase in oil prices, and that, all else equal, would be inflationary. So it's something we're looking at. It's certainly a risk.
Yeah, I mean, this is now, I think of the Marrakesh meetings, they happened really right after October 7th and the terrorist attacks, and then 6 months ago in the spring, there was the Iranian missile attack on Israel, and here we are at another IMF annual meetings waiting on whatever comes next in the Middle East and the economic ramifications of that as well.
That's right. Yeah, and it's both energy costs, but also shipping. I mean, it wasn't so long ago that we saw the implications of shipping channels that got blocked. So
that's right.
That's certainly a possibility, though we haven't seen that come to bear in our data so far.
Yeah.
So it hasn't been as bad as it might have been.
Can I ask you about decision making and the MPC? This interests me, as an American who watches the Fed very closely.
Yeah.
We almost always have unanimity in Fed decisions. We had one dissent at the 50 basis points cut, Mickey Bowman, which is, really, I think it was first time in almost 2 decades.
Yeah.
Different at the Bank of England, 5-4 decision. It's more common to have dissent. Could you just explain that structure a little to us?
Yeah, sure. So it's very common to have dissent on the MPC, and our names are attached to our votes at the Bank of England, which isn't the case for the Fed. Sometimes Fed members will take credit, go out and say how they voted,
but
they don't have to. So, and the dot plot is entirely anonymous unless you don't want it to be. And so that's different. And I think given that our names are attached to our votes, there's accountability there, and so the view is that you should vote exactly as you would if you were the only person voting. So act as if you're the marginal voter. That's how decision making's made. I think the Bank of England also puts a pretty big focus on avoiding groupthink generally. That's why we have this structure of external MPC members, of which I'm one, one of 4, and internal MPC members. We talk to each other, of course, but the external MPC members are there. They didn't grow up at the Bank of England. We bring a different perspective, and I think that perspective is appreciated. So it would be weird to have that set up and then force everyone into the same vote. That wouldn't really work given how we're set up.
That makes a lot of sense. And the external factor obviously brings in different voices and perspectives into that.
Yeah, quite intentionally.
Let's talk about the Fed a little bit. Their 50 basis point cut, I think, happened on the eve of the Bank of England's decision. How do you think about what's happening here with the dollar and the Fed? Were you surprised by 50 basis points versus 25? And how much do you at the Bank of England think about their interest rate path going forward and how it impacts dollar pound?
Yeah, it's a good question. So lots of people think that Jay Powell and Andrew Bailey have red phones on their desk and they just ring each other up. That's not a thing.
Thanks for disappointing us.
So yeah, sorry, we find out when you find out what the Fed's decision is. And often they are one after the other.
Right.
And that's just how the schedules fall. But I will say that we pay attention to what's happening with the Fed's curve because it has huge implications for ours. Actually, a sell-side analyst once wrote, "We're all tied to the drunken dragon of the U.S. Treasury market," and I thought that was a great way of putting it. And it's even more the case now than it has been historically. So in the past, if you look at moves in our curve in the UK, about a third of them were driven by factors outside of the UK. Now, if you run that decomposition, it's about half. And so our curve moves around pretty significantly off the back of things happening in the US and in the Eurozone in particular. So when the Fed moves by 50 basis point, it moves our curve around a whole lot too. And of course, our forecast is conditioned on our on market pricing for our curve. So that affects our forecast too.
And you mentioned the Eurozone, and I was going to ask you how much you think about the Eurozone. We have ECB President Lagarde with us at the Atlantic Council tomorrow. Does that weigh on your decision making even more so than what the Fed's doing?
So there are some spillovers in terms of financial conditions based on what the ECB is doing with rates. And the UK is a small open economy, but it's only in that context, I think, in which we're really thinking about what's happening in the US and the Eurozone. So it's in terms of spillover effects for what's going on in the UK economy. The UK economy is pretty unique for a few different reasons relative to the US and the Eurozone. But these moves in the curves in particular really spill over into the UK. But there's a foreign exchange channel as well that affects the UK economy. And sometimes, depending on how big shocks can be, factors in growth could affect the UK as well. So we consider those things, but it's always in the context of how it actually affects our economy.
So speaking of spillovers, let's talk about China. Obviously, there's a lot of talk here at the IMF meetings about China and trade. There's been some disagreements about China's manufacturing overcapacity, the imbalances, how that spills over to a range of economies, including in the US. How do you see the UK-China bilateral relationship from an economic perspective right now?
Yeah, so we're certainly watching what's happening in China, all the stimulus measures that have been announced, what might be expected going forward. And we're interested in it, again, insofar as it affects the UK economy. One thing we've been looking at a lot is kind of Chinese export prices, insofar as they feed through into our UK import prices. That's been something we've been considering. As you know, export prices from China have been in disinflationary, deflationary territory. And so there is a question about what that means for our import prices in the UK. Right. Core goods price growth has been really low recently. And so there's a question, historically speaking, you generally tended to see kind of core goods growth of 1%, services price growth of around 3%, averages out to around 2%. But if core goods growth is much lower, then actually you could have higher services growth and still have it be target consistent. So we've been looking into that a lot.
Is it just so I understand? Is it possible of importing disinflation? Is that how you're describing
That's
it?
Right. Yeah, that's right. On the goods side, in particular,
on the good side.
When it comes to China.
Okay, so that's
right.
something you're looking at.
That's right. So it's something we look at a lot. It's unclear how much we are actually importing disinflationary forces from China. I think probably those impacts are limited, and we expect export price growth in China to rebound as well. So, I think that's one way that we're thinking about spillover effects from China. Another, of course, is just through global demand, and that affects commodity prices, things like that.
I want to go back to your three scenarios, which I thought was really interesting. On that third one of structural changes, the world has changed post the pandemic. Does that mean that from a Bank of England monetary policy perspective, you have to look at different types of data to make your decisions? We asked this to a lot of central bankers. Are you still looking at the same metrics you were looking at before? Are you including different things? You talked about slicing and dicing before. I'm just curious how you think about that, because if there are structural changes, it perhaps means you have to look at the domestic economy in a different way than you were previously.
We do to some degree. So if there are structural factors that are totally fundamentally different because of the pandemic, and you have, for example, a higher U star or a higher R star, these things aren't observable.
Right.
So you have to kind of interpret them from other data that you're looking at. And so, one example of U star possibly being higher is looking at how wage growth has just been above what our models can explain for a while. So that's one indication. Also looking at kind of matching efficiency. If it's fallen in the UK, that would suggest a higher U star. So we're looking at some of that. I would say in the UK in particular, given the difficulties with the labor force survey, which has had pretty low response rates, we have branched out to kind of other indicators of labor market slack. So
what are those?
So looking at, for example, Indeed's
So
data,
this is something that wouldn't have happened 5 years ago.
That's right. It wouldn't have happened pre-pandemic.
Right.
So what we saw was, the regular data releases during the pandemic were mostly backwards looking and just were too slow to figure out what was happening during that period. So a lot of us branched out to look at things like open table bookings and Indeed data. So we've maintained a whole bunch of that. So we're constantly doing cross-checks on kind of our traditional data feeds with some of these less conventional ones.
Well, let me just ask you then the longer term picture, regardless of what happens in November and the interest rate decision, just the path going forward into 25, 26, how you see this. I understand different scenarios, but where you would have to, kind of, if you saw one way or the other, if you did a dot plot, for example, at the FBC, where you see the path going beyond the next decision.
Yeah, so the path depends on the starting point and the end point, and we know the starting point was at least in August. but we need to know the endpoint to determine a path. And in my view, the endpoint should be the long-run neutral rate,
That's what we should
so
get to.
R star, which I think there's reason to believe that R star has probably risen a bit. I won't pretend to give you a point forecast,
No,
because that's a losing battle.
Yeah.
That's right, and there are huge bands of uncertainty. But there are a lot of reasons to think that maybe R star has crept up. We can debate how much, but the direction, I think, is likely, in which case we're not going back to the rates that we had pre-pandemic, probably. So rates will probably have to end up a bit higher than they were. I think that's been well digested by the markets, by businesses. But it's worth pointing out. Also, you can take a lot of different paths to get to the same place. And so, just as I said,
pacing and timing.
That's
and
right.
That kind of,
yeah. So it's really the area under the curve that matters.
Right.
So you can be an activist policymaker who thinks that we should respond aggressively to things on the way up and on the way down, or you can be a bit more gradualist. I think in the interest of not generating volatility, I tend to favor more of a gradualist approach. Given I think our star is probably a bit higher, again, that points towards kind of a cautious approach in this rate cutting cycle.
2 final questions, and you've been very generous with your time. I know it's a busy week, Megan. On tariffs and trade policy, you said UK's small open market economy. Tariffs has been the talk of the meeting so far. IMF Managing Director Georgieva led with it in her curtain raiser speech. Obviously, we're 2 weeks away from presidential election here, where tariffs is featured prominently in the debate. How do you, as a UK policymaker, think about the spillovers from what may or may not happen here in the US in the coming months?
Yeah, so first I'll say we don't speculate on what is going to happen, and I think that's important in the US or in the UK, actually. And I think that's important just to maintain independence, so we tend to put things into our forecasts that have already been legislated. Related to that, the UK budget is coming out at the end of this month, but we'll have that in our November forecast round. But in terms of tariffs, we don't speculate on the outcome of the U.S. election. In fact, even if we did, I'm not sure we'd have much of an idea. Exactly. But we have some experience with tariffs in the past. We don't know what they'll look like, particularly with respect to the UK and a U.S. ally. But generally we know that tariffs tend to be inflationary for the country that's imposing them.
And even more broadly from the US election, it just seems that tariffs and trade frictions and industrial policies, there's just a more move to this, even outside the US. And that, I think, weighs on every economy, including in the UK.
Yeah, it does. That's right. And it's a risk factor that we're looking at as sort of potential risks going forward. But if you introduce rigidities into an economy, you tend to get substandard outcomes.
Makes sense. Final question for you. We're here at the IMF. It's IMF-World Bank Meetings, 80th anniversary of the institutions, as we are reminded everywhere in the branding here. What do you think going forward for these institutions? There's a lot of self-reflection happening, which makes sense at the 80th anniversary about the future. How do you see it from your perspective? You sit at the Bank of England, UK and the US, the founders, really, of the Bretton Woods system, but a lot of questions about the future, both of the IMF and the World Bank.
Yeah, that's right. I think it's great that there is a lot of soul searching about these institutions and how they might adapt to kind of the global challenges that we're facing going forward. And I'll say this not just as someone who sits at the Bank of England, but also a former sovereign debt nerd, self-proclaimed. I think there are some things that the IMF and World Bank do quite well and some that they do a bit less well. On a bit less well, we're seeing the challenges of member state countries not agreeing on things. So there are challenges around governance and around debt restructurings that are really difficult to resolve if all of these countries can agree on them. So, I think that's more lately than previously has become a real challenge as the debt landscape has shifted. But a few things that they do really well, they risk share really well. They can leverage things up really well. That's really important for institutions trying to provide a lender of last resort function for a lot of struggling countries. And so I don't think we should lose sight of that as we do some soul searching to see how to improve going forward. And then also, I think, kind of in this context in which we've got, a war in Ukraine, trouble in the Middle East, these institutions are kind of a microcosm of a better state of the world than one we're living in outside, where people from different countries do come together
Yeah.
over really good analysis to try to support those who are most vulnerable. So I think just as a microcosm of a better world that we could envision for ourselves, they're quite important too.
Thank you for ending us on that note of optimism today. I think that is part of the spirit of Bretton Woods,
Yeah.
and we look forward to continuing the conversation. Thank you for coming back to the Atlantic Council. We hope to host you again soon.
Yep.
And I want to thank everyone for joining us this morning. We have a full day of programming ahead. We'll be decoding the World Economic Outlook later today at 1 p.m. with our experts, and we have a series of ministers and governors throughout the day. You can find our full schedule on the Atlantic Council website. Thanks for joining us. We wish everyone a good rest of the day.